Hey guys, it's George Uno here with REIClub, and we're here with another edition of First and Worst. Now, my guest today is Brad Gibb, and he has got an amazing story. You guys are going to love this. So put yourself back. We're in a little mini recession right now, but put yourself back to the big one, okay? 2008, Brad was graduating from college in investment banking. He got a job at Goldman Sachs and was working in downtown New York. Just a dream job, following the American dream and just doing absolutely amazing. But then what happened? Well, he had front row tickets to the collapse of Wall Street. And what that did for him, though, was he got to see, wow, these people who are relying on Wall Street are getting crushed. These people who are a little more diversified and doing some other things are doing fine. So it really got him to see behind Wall Street and to kind of ditch Wall Street and head to Main Street. And so he started chasing down real estate investments. He had done one little deal, a little house hack deal, moved out, made it a rental. But the crash really taught him that he needed to control his own destiny, and relying on Wall Street was not going to do that for him. Waiting 40 years and putting money into a 401k was just seemed really, really risky to him. So he bailed. He had his Jerry Maguire moment, he likes to call it, but nobody came with him. But that didn't stop him. He went out. He started doing active flips. So flipped a house, and that is an amazing story. You're gonna love that one. Involves a lot of Arby's. It's some sad nights. But anyway, he did that until he got really clear on his vision, and he found what he was really good at in real estate, and what he wasn't so great at. And being, the analytical accountant type, he built a spreadsheet, really, figured out what his goal was, and worked his way backwards on that spreadsheet of, okay, what do I need? Who's going to do this? What am I great at? So really an analytical, mind coming into real estate and, making that roadmap for himself, which is really interesting because we're actually putting out that roadmap right now. You guys need to hear this, though, straight from him, because he's got just some funny stories to tell you guys about getting into investing and, having a horrible deal go wrong. So, Brad, how are you doing down there in Salt Lake, man? It's good to have you on. Thanks for coming.
George, thanks for having me on, man. It's great to be here. It's already been fun, kind of off camera, catching up and telling real estate stuff back and forth. But yeah, life is great. Utah is full of snow right now, so we're having a great time in our winter wonderland. But yeah, excited to get on and share some stories and hopefully maybe a tiny bit of wisdom with your listeners. So thanks for having me on.
Oh, man, you got some good stuff. So take us back, 2008, Manhattan, New York. What was it like there?
Oh man. So like I said, this was my, like I said, was my Jerry Maguire moment. It was where I realized everything I was doing was not getting me where I wanted to go and I needed to make a change. But so I had just recently graduated, master's in accounting, landed, like you said, landed my dream job, Goldman Sachs, downtown New York, all dreams coming true. But little did I know this is like mid-summer of 2008, right? No idea that I'm standing on the tracks and a freight train is barreling down on us. But I'll never forget it. The day that we all knew that everything was starting to melt down, it was no kidding ourselves anymore, was that day that Lehman, we went to bed, Lehman was there, we woke up, Lehman was out of business, right? Well, our building was next door to Lehman Brothers. So I'd get out of the subway, turn the corner, walk down the street, and those pictures you see when you Google 2008 of people like with cardboard boxes, they started filing out of the building as we were trying to get into our building. So we had no idea what was going on. We go and we spent the next 2 weeks. I don't think I even made it to my cubicle. We sat in the lobby watching the financial news, like waiting to see, like, are we going to be next? Is the world going to exist when we wake up in the morning? Like what is going on? And while I was there, I wasn't a trader. I wasn't like on the floor doing that. I was in compliance, which sounds super boring, but for a nerd like me, it was amazing. I loved it because I sat at the center of, like, we were in the private wealth division of Goldman Sachs. So we're working with like everybody everyone hates, right? The top 1%, throw whatever rocks you want to work like those were our clients. But I got to see what they were doing in the market. And I got to see what they were doing with their private investments. I got to see, like, I held their tax returns. And I had training, so I could actually read them and understood. I was like, oh, this is what that person's doing. Now, full disclosure, I never held Trump's tax returns ever. Promise you, never did. But I really got to see what it took to build real wealth. But then I had the other side of this coin that we were all being exposed to, of Americans losing their retirement accounts and their pensions and their houses and everything that, like, they had followed the line of get a good job, like get an education, get a good job, max out your 401k, buy a house, and everything will be fine. And that was collapsing and being crushed. So I had it like right in front of me, both of those worlds. And I could only last in that cognitive dissonance for so long, right? Until I was like, look, I can't, I can't be part of this anymore. And so I left for my own reasons to say, well, I need to build my own wealth the way that I want to do it. And also I just couldn't be around Wall Street anymore. And so like I said, Jerry Maguire, I'm just literally, it was almost night and day. Woke up, was like, I'm done. I'm leaving and I don't know what I'm going to go do, but I'm out. Like remember having a conversation with my boss and he's like, Brad, are you like, okay? Cause we're in a meltdown and you're in banking and you're quitting. Like, this doesn't seem like a great idea. And I was like, I know it doesn't, but staying here is worse. So, I'm out. I bounced, found a consulting gig back out here in Salt Lake, but that was my 2008 baptism by fire into, I got to do something different.
Yeah, you probably saw those two different worlds and you realized which path you were on, huh?
Very clearly, right? Because like my manager, like I was worried. I was the bottom of the totem pole. I knew I was gone, right? I knew, right? But my manager had been there a couple years. He was scared. His manager then in 5 years was just scared as he was. The guy that had been there 20 years and had his entire net worth and investing in pension, everything tied up in Goldman Sachs. He was just as scared as I was. And I was like, well, I don't want to be you. So why would I stay on this track? I got to do something different. That was it.
All right. So you move back west. You got your consulting gig. What did you do in real estate then?
So my first deal was actually prior to this, which again gave me another like comparative point because I did a little bit of real estate because that sounded fun and exciting. And it was 2006. It was you fog a mirror. They'd give you a piece of real estate, not even ask you any questions. So I was like, maybe I'll do that. So we actually bought a 3rd floor condominium unit. We bought the air. It didn't even exist. We bought it in plans and then we waited for it to be built. And because I was the best real estate investor that had ever been born, I made 30 grand while I was waiting for it to be built. Right. But little did I know everything. Like I probably did poorly because everybody else probably did more than that. But it did take some parsing of my abilities in the markets, right? I had to learn some of that. But that was my first deal. And we, like you said, we house hacked it. We moved in, lived there a year, and then moved out and rented it. And we got no money down and really good interest rates and all that kind of stuff. And that was kind of just a thing I was doing on the side, in addition to maxing out my 401k and maxing my Roth IRA and doing a little bit of day trading or options or some Forex or whatever else. Like that's what I felt was diversified, right? And millionaires have multiple streams of income. So I thought I need totally different buckets that I was doing stuff in and trying to hold all that together. So that was my first deal. And like I said, it was amazing. I moved in with 30,000 in equity and was able to pull that out. And that became a snowball that I could reinvest into more real estate and ultimately kind of became my permission slip to really go after this. But that's what kind of got me addicted, but I wasn't paying attention yet. Like I didn't know how awesome that was because the market was still going up. Day trading was working. My job was working. There were prospects, but it wasn't until the tide went out that I was like, my 401k is awful. My IRA is locked up till I'm 180. It may as well have been 65, may as well have been that long, right? Day trading was no longer happening. Forex was it's like the only thing that still actually worked was the fact that my tenant was paying me rent every month and he was going nowhere because he wasn't quitting his job and he, couldn't buy another house. Like, where was he going to go? I was like, oh, every single month that check rolls in. I was like, there's something to this. Right. And then obviously seeing, there's a stat now, we found this was after the fact, but it was my experience. Everybody's successful. Everybody had built true wealth. Real estate was a major component of the wealth that they had created to become a Goldman Sachs private client. Nobody just had their 401k. Like that's not what got them to be Goldman Sachs private clients. It was the real estate that they had. And so that was the shining a light on maybe if this is working now in the worst economic conditions, maybe that's what you should do all the time with all of your money. And that was the decision I made and went all in.
All right. So you started out with passive rental. Then you're saying, okay, let's go all in. What did that look like?
Yeah, so it was a semi-pat because I was still landlording it, right? And we were part of a condominium, so not a lot of maintenance or things like that. But I was still like popping over and fixing the sink, or talking to the tenants, hey, you're late, can we get this paid or what? So I would, but one, I could do that. It wasn't a big deal. And then I did a couple more, right? I took the 30,000 and did a couple of other additional deals, and those ones required a little bit more work. But each deal I did, I was like knocking it out of the park, because this is still before the crash. So I was like, I am the best real estate investor that anyone. I'm a golden boy. It's great. But then after the crash, I came back. I was like, okay, things are on sale. Let me try this again, but I'm going to need to be involved. So I bought one that I was going to do a full on remake, right? So this wasn't just lipstick on a pig and make this thing okay. It was like gutted to the studs. I was like, I can do this. So mistake number one was the property was about an hour away. I didn't factor that in. So I had to drive an hour each way to do the work. And then it was a bigger budget than I was used to. So I needed a little bit of private money, and that was points and interest, and that was expensive. But I thought I could do this quick, and wasn't quick, which you'll find out in a second. But that was the second mistake, was way out of my skill set. But what ended up happening was, everything was going well until I pulled the carpet back and cleaned up the pet waste that was there. We've all been in those houses before, and got that out of the way. And then the floorboards were super squishy. I was like, uh-oh. So I pulled the floorboards back, and a mountain of surprises awaited me in that house. And it seems like everything we tore out there was surprises after surprise after surprise, and it just never ending. And the bottom of this worst deal ended up being because I was driving out. So I started getting off work. I was working more, Monday through Thursday, so I could leave Friday at like noon with my, work clothes in the back of the car, and I drive to the property, not even go home, just drive to the property and work until dark. But I had to stop working at dark because the power was off at the house. So I had a little like power tools to do my stuff, but no power and no water at the house. So I could only work until it was dark, and I'd go over. There was an Arby's just around the corner. So I'd go to Arby's. I don't know if you guys remember Arby's, but they had the 5 for $5 deal. You get 5 of their roast beef sandwiches. It was like, hey, all in. So 5 for $5, brought it back, sat on the floor of an empty, stripped house with no power and no running water. And I'd eat my 5 for $5 and then lay down and go to sleep and wake up when the sun came up. And then I work all day Saturday. And then it would sit all week while I worked, my full-time job, and couldn't spend the time. And then I'd come back the next Friday and I'd repeat. And that went on for about 2 months, every weekend for 2 months, with my 5 for $5 in the dark, sleeping in the property, until we finally got that thing back up and on the market and in my rental portfolio. So that was my worst deal, where I questioned lots of things during that 2 months.
Oh man, that could have made for a really good reality TV show, though. I mean, you got like part fix and flip and part super size me going on at the same time.
It would have been yes. That if only I was that smart, maybe I could have made something of it.
So, what did you learn from that deal? I mean, you go in going, I can do this, fix and flip. My first one, gut job. I can do this. What did you take away from that? What's the lesson you learned?
So the first thing I learned was I have a very supportive spouse that made this all possible, right? Like, as dumb as I was, she was there still supporting me. And she actually became a catalyst in really helping me understand what needed to change. Because after we were 5 houses into this, and even with this one done, it still became this game of I had 5 tenants to take care of, 5 different properties, and now they're getting more spread out to where this is becoming much more of a time suck. And it was a reality check to say, well, okay, what is this going to look like? And fortunately for me, I have a supportive enough spouse that she could see that, well, even as unhappy as I was in this, it was better than corporate Brad. Like, I was much better than corporate Goldman Sachs unhappy Brad. So we were still good there, but it really was like, she asked me the question, like, okay, so where do we go from here? Like, skip to the end. What does success look like? And that was a question I hadn't really asked myself. I had just I picked up that little purple book that we all know about, right? That we've all read. And I was like, this is what I'm going to do. And she's like, okay, great. Well, what does that look like for us? And what does our life look like? And how much is enough? And how do we get there? And those were questions I didn't have answers to, because Those weren't in the book, right? It was just concepts. And so that was when we sat down and went through and began to answer those questions and say, okay, because the great part about that worst deal, as over budget and over time as I still made a lot of money on it. Like, it still worked, right? And so fortunately, when I get into this, I had a really good mentor that showed me that if you do real estate right, the one lesson in that book that if you do nothing else, well, there's lots of lessons you need to do in that, but one core one was cash flow is what matters. Not appraisals, not market values, not trends upwards, and it's just basic cash flow. And fortunately, I was an accountant. I knew numbers to where I could buy right, that if we do the numbers right, you can screw up really badly. And like we have a saying here that the worst, if you do that right, your worst deal, real estate deal is like a bad haircut. So George, like if you get a terrible haircut, what do you have to do?
Just got to wait for it.
Just wait, right? And it'll fix itself, right? Just give it time. And so if we do this real estate thing right, and all of my deals had the fundamentals of right, but I was running out of time to be able to continue to do all of this. And so we sat down, I started going through and saying, well, we started with, the 7 habits of highly effective people question. We start with the end in mind, right? Stephen Covey. So it's like, what am I trying to accomplish? And I didn't have dreams. I came from a family farm. So I didn't need millions. I didn't need penthouses on the beach. I didn't need Ferraris. I was like, look, if I had 20 of these houses paying me $500 a month, like that's good money. Like that's what I want. That's what I want to be able to do. And then it was like, when do I want that? Well, the 401k methodology is 40 or 50 years from now. It's like, I don't want to wait. I don't want to wait that long. Right. But I also didn't need it tomorrow. Like I had a good job. I made good money. I was reasonably fulfilled with it. There was still lots of opportunity that I could pursue inside of my career. So like, I didn't need it tomorrow. So we settled on 10 years. Like, what if we just really focused on this for 10 years and we were able to get 20 properties in 10 years? Like I could be retiring in my mid 30s. Things would be like, that would be insane. And then it would open a new chapter for us at that. So that became our goal, 20 properties, 10 years. And then I started reverse engineering the steps. So, and like I said, I built a spreadsheet. And you think I'm joking when I say this. I don't know, like spreadsheets are my love language. Like if you opened up my chest, there wouldn't be there'd just be a spreadsheet in there. This is the way I'm wired. When I was dating my wife, I built a spreadsheet. And like, I don't know, that's just what I do. So that's a true story. We could cover that another time. But I ended up trying to model this out. Like, okay, if I need 20 properties, if this is how much they cost, and this is how much they need down, and this is how much they cash flow, this is resource-wise what this would take. And then I started going through and saying, well, man, it's a lot of time. It's a lot of work involved. So what am I good at? Here are the things that I'm good, and this is what I'm willing to do. And then here were the elements of what I'm not willing to do. And fortunately, like I said, I had a supportive spouse, but I also met Ryan and Jimmy, my now business partners at this time, and we were all trying to solve the same problem. So we were looking at this saying, well, what do we need to make this work? Well, we need to find deals. Well, I don't want to drive neighborhoods and look for grass that's not cut and windows that are boarded up and skip trace to find the owner and send out things like I just want the deal brought to me. So I need to figure that out. And then when it's there, it's going to, by definition, be a little bit run down and need work. And so I need a handyman or somebody that can fix this up. And then I don't want to talk to the tenants. So I need somebody that can talk to the tenants. And then, well, if that's all going to happen, what numbers need to happen till they all get paid what they need to be part of this team? And so we started mapping out what this team would look like. And we were very active in real estate nights and communities and clubs and that kind of stuff. And so pretty soon we found a real estate agent that wasn't trying to sell me my white picket fence first-time home buyer, but understood investment numbers. And so we got that guy on the team. And I actually gave him a blank contract with my signature. And I said, look, any deal that falls inside these parameters, just make an offer on it. And just tell me when we get one accepted. I don't even need to, we just set up the parameters because I knew that if they were in this thing, I could win. I might not win tomorrow, but again, even if it was an awful bad haircut, it would grow out and in 10 years, I know that I will have made money. So I just gave him the parameters and said, don't call me unless you have an accepted offer. And now I was out of the finding game. I was like, this is amazing. And then when we found a deal, I was like, I'm not eating 5 for 5 on the floor of this thing again. So we found a handyman that we set up parameters and said, I want the rehab to fit inside that. This would be the budget. This is how much equity we expect to step into. So this is what we can pay. And these are the things that we want fixed. And I was like, you go to Home Depot and get all the SKUs and figure it all out. And let's come with a budget. And great. Then only call me when something doesn't fit into this. So we solved it all ahead of time and then handed it to him and said, great, when I get a deal, we'll call you. You'll come in. You'll handle all this. It's great. It's like, cool. Now I don't want to take a call on Christmas Eve, right? When the sink is backed up or whatever. So how do I solve that? Same thing. We found somebody who likes property management, had built a system to be able to run that and could, manage our type of property in our type of area for a reasonable amount. And we got that person and handed them our thing. And then lo and behold, I was out of the middle of this. And I was doing what I was good at, was coordinating these people, setting up the model of how it ought to run and making the money to be able to fund this, to be able to make it run. And what I found out is, sure, I stepped into equity in that deal. Well, the intent was to step into equity. I didn't end up stepping into equity. But if I flip the house, sure, I can make 20 grand a rip, right? But at what cost, right? I found I was much better. I could make 20 grand faster being an accountant or a consultant than I could flipping houses. So I'm happy to let them have that portion of it. Because at the end of the day, what did I want, George? I just wanted 20 rentals paying me $500 a month. So that, as long as I got that, I could give away all the middle because I got my life back. So we built that team. And again, all I needed was 2 a year to be able to, knock this out. And we did a couple the first year, but as everything does, when you get good at something, you get some momentum behind it. I could solve the problems to make this thing go faster. And so pretty soon when I ran out of money, I had friends that had money that wanted to do real estate that hadn't figured this all out. So they were happy to say, hey, let's do this together. I'll give you the money, you go run your system. And pretty soon we had done 5 or 6 deals. And then we ended up hitting that number that we hit and ultimately be able to walk away in only about 5 or 6 years. It was pretty awesome. Like, it got me what I wanted without having to do what I didn't want. And everybody on the team won, including the tenants. They had a great place to live. And it was amazing. So that was the outcome. And there were bumps and bruises along the way there, but nothing as bad as 5 for 5 Arby's on the floor. And it ended up working out. And so that was the plan. Then I got to transition out of, I had a fulfilling 10 years of accounting and consulting work, and I could transition into what allowed me to be much more fulfilled. And that real estate gave me the foothold and the permission to be able to do that.
Yeah, what I love about that is you found the people. I mean, you're honest with yourself, very honest, and said, I am bad at this, I'm bad at that, I'm good at this, but this one's also a struggle for me and someone could do it better. And then you just trusted those people. The signed contract with your realtor, that's just like the epitome of trust. And you find that being really vital in making sure the people, your team members work out for you?
So you mentioned 2 things, right? Trust and honesty. And those are obviously huge tenets to having anything operate. Another great Stephen Covey book is Speed of Trust, right? And I had kind of read that to where and trust just came off of like trust but verify, right? And I was an accountant, I was an auditor. I was like, look, if the numbers make sense, like that's, so it was about just setting up a game that we were really clear about. This is what winning looks like. This is what I want you to do. This is what I'm going to do. And off to the races. So it wasn't just find me a good deal, George. It was find me a deal in these zip codes, in this price range, with these amenities, in this condition. Then I could trust. So it was, and we had to kiss frogs. Don't get me wrong. Like, we had some that didn't end up working out awesome, but that was a huge, and I'm good at that. That's what I realized. Like, as I was college educated, I was successful, I was in management positions. I knew how to put teams together. So I was like, let me leverage that. I'll do that. And then the other side of it, George, was like you said, just what do I want, right? And this is the hard one. Anybody comes to me that's like, hey, Brad, you're successful. What should I do? It all starts with, well, what do you want? Like, what does success? And as humans, we are so good at one thing, which is like lying to ourselves, right? Or trying to look good to other people. And so it took some getting clear about what I actually wanted, not what I thought I should want, right? Or what other people would want for me, but like, no, what is my own success in it look like? And I kind of realized, I shouldn't say this on a real estate podcast, I don't like real estate. I really don't like real estate. I just like what it gets for me, right? And so, like, being honest about that to me, like, no, here's like, I don't need Lamborghinis. I don't need a penthouse. I don't need all that kind of stuff. I just 10, 20 properties, right? So getting really clear about what success looks like, what our timeframes are. And the exercise I like to go through to do this, and anybody I talk to, I take through, is When they tell me what they want, I don't believe them. And I say, well, why? Why does that matter? Why would you want that? Okay, what do you really want? Why do you want that? And we go, it's peeling back layers of that onion until we get to the core of what it really was. And, I wanted to give answers of, I want to be financially free because I want to own my time and I want to golf every day and spend time with my kids. And like, don't get me wrong, like I like spending time with my kids. But I was like, I'm more driven than that. Like I wanted to pursue something, right? And so that's why I was like, I know I don't want to pursue real estate. So I had to get real with myself that's why I gave myself 10 years. Is like, if I was free tomorrow, I don't know what I'd do. I'd probably destroy my life if I was free tomorrow. So why don't I spend some time reinvesting that in what is it that I do want to do, right? And give myself a window to be able to do that. So for sure, it really gets down to what do you want? Not just what do you say you want, what do you really want? And what are you going to do with it when you get it? Is a massive, it's where you have to start or else you're going to chase squirrels forever.
Yeah, begin with the end in mind. So when you guys have coaching students, do you find that a lot of them, kind of struggle with that? They think they're being honest with themselves, but they just are their goals are surface level?
Oh man, all the time. So when we work with somebody, I won't teach you anything about real estate. I won't teach you anything about numbers. I won't teach you anything about taxes. I won't teach you anything about financing until we answer 3 statements. What do you want? Why does it matter? And then who do you need to become to get it? And yours has to be unique to you. No cheating on your neighbor, no looking over your neighbor's shoulder. Like it's yours, right? And we actually, our first one-on-one coaching call starts with that question, and it's answering that. And if it takes us an hour, it takes us an hour. If it takes us 10 minutes, it takes us 10 minutes. But we answer that first, because to then build the roadmap to get there, if I build you, if you've got a map of Dallas, but we land in Nashville, no matter how well you follow that map, you're never getting to your destination, right? So it's not about following directions. It's about first having the right map. So we get the right map first, and then we go through and say, great, let's decide what you're good at, what you're not good at, what you're willing to do, what you're not willing to do, what resources you have, what resources you don't have. And then now that we've got success measured, 10 houses, 20 houses, 30 houses, or whatever mix of assets or type of investing is going to get you. Because like I said, I wanted mine to be passive because I knew I was going to pursue something else. So I was only willing to spend 5 to 10 hours a month on this. So I had to have a portfolio that reflected that. You might have a little more time, whatever it looks. We're going to build that ideal portfolio. Then we're going to look at what are you good at, what are you not, what resources you have, what don't you have. And we're going to reverse engineer a path to be able to get there. But that path is being unique to you. It's going to follow the same sets of principles, which is why that little purple book, right? Rich Dad, Poor Dad is important. It has the principles in it, but it lacks the roadmap. It lacks the step-by-step. And that's what's unique to George, to Brad, to Ryan, to whoever, right? John or Jane or whoever's going to go through this. And so it really is critically important to say, first off, where are we going? Because the worst thing to have happen would be, and this is what we find happening so often, is we spend 10 years following a plan that we were told was going to get where we want to go. And then we wake up 10 years from now and it's not taking us where we want to go. And it's not about the money we would lose, or even if we made money, it's not even about that. It's about the 10 years that we can't get back. Right? That's what we don't want to repeat.
Yeah. Any road will get you there if you don't know where you're going. So it's super important. You guys do.
Yeah. Alice in Wonderland, right? If you don't know where you want to go, then great. Any road will get you there. Exactly.
Yep. Well, so Brad, can we find out more about your guys' coaching program? I know for a lot of us, this can be really important. If you're looking for that passive income out of real estate, maybe swinging hammers isn't for you. What's your company called?
So yeah, our company is Cash Flow Tactics. And this is exactly what we ended up landing on of okay, what value do we add to the marketplace? And it really is this idea, right? You've read Rich Dad Poor Dad, you're excited about real estate, or you're just done with Wall Street, right? We know the path of education, job, maxing out 401k isn't going to get there, right? That's kind of what I realized was my unique ability, was helping people do exactly what I did and reverse engineer. Well, what does success look like? Well, let's talk about that. Let's learn the principles. Let's figure that out. And then again, the coaching through the steps of what type of properties, how do I evaluate a market? How do I evaluate the partners that I'm going to work with? How do I get financing? How do I run the numbers so that it's only a bad haircut right? Because I'm not going to be involved, and there needs to be leeway for mistakes to be made and me not to lose everything. And so how does that all work, right? That's what we've organized. And we started with ourselves because the three of us did it ourselves first. So we have firsthand experience. We've done this, right? And then we brought more people in and we brought more people in. And now we've done this with over 1,000 people. We've done over 3,500 transactions for them. And we just, 60 million in capital invested. And by the way, this isn't like in my company. This is them in their own plans and assets that they own individually, like them running their own successful plan. And we just crossed a huge milestone, which we're celebrating as a community right now, where reported income, right? Not everybody reports everything. So we probably crossed this sooner, but reported income back to us is now over $1 million a month inside of our community of purely passive income. So we're not flipping, we're not spending our time, we're not eating 5 for 5 on the floor. This is passive income inside the community. So that's what our coaching program is built around. Is if you're a successful, driven person that just needs a better roadmap, right? That's the roadmap. And we do that we call it cash flow 90-day sprint. So we'll take you from wherever you are. Maybe you've got a deal or two, or maybe you've never done this before ever. We build that roadmap from where you are to your first or next passive income in 90 days. And it's a mix of group coaching, but then also one-on-one with us going through this process. So you got a clear roadmap to follow. And we've got awesome support and community and networks and opportunities to then, we don't want you to stop at one. We want you to get one and then get addicted to it. And then we do it 10 times or 20 times and support you all the way on the path to be able to do that. So that's what our company does. You can find us at cashflowtactics.com. We have a podcast also where we talk about these concepts called the Rise Up, Live Free podcast. That's kind of our mantra, right? Of what we're here to do. It's not about the Benjamins, although those are fun. It's about building a life that you love. So Rise Up, Live Free podcast or the Cash Flow Tactics. You can also, I'm not a social media person. You can find us on the Facebooks. So you can go there and search Cash Flow Tactics. And we've got a free group, 6,000 or 7,000 people in there, all learning and doing this. Lots of free resources. You can go get there to get yourself started. So any of those places you can find us.
That's really awesome. That 90-day boot camp is really cool. And you guys start with the end in mind. So, and there's a ton of boot camps out there, how to do real estate. But I feel like you guys really provide a lot of value in showing people, hey, where do you want to go? Help them discover that. And then you guys have created $60 million of wealth for your clients and $1 million passive every month. That's just crazy. I mean, that's just good. It's good stuff to see.
Well, I appreciate that. It's been a lot of work, and I don't take the credit. We work with amazing people because we're very focused on it's not wave magic wands and unicorns and rainbows and we're rich overnight. Like, it's not the game we're playing. But if you can say, hey, I can see a path of 10 years and again, passively leveled investment there, that's the path that we'll lay out for you to be able to walk it. It's been awesome. And like I said, I don't think we've ever had anybody actually it's the same with us. You get momentum, you figure out your constraints, you're able to move a lot faster. But that's the game we play. And it's a lot of fun, super rewarding. We have a great time with it.
Awesome. Well, thanks so much for being a guest, Brad, sharing your stories. I love it. Going to look at Arby's a little differently now. Guys, if you want to learn more about Brad and cash flow tactics and what they can do for you guys, head to REIClub.com/cashflowtactics, and we'll have all the links there. You guys can get in touch, listen to Brad's podcast, Rise Up and Live Free, and a bunch of other resources you guys can take advantage of. So once again, REIClub.com/cashflowtactics. I'm George Uno. Thank you so much for tuning in. Thanks for your time, and we'll see you on the next episode.